Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Wednesday, the 11th of October. Starting off with the FTSE 100, where given that some are suggesting we're going to World War III, the market's looking relatively chirpy. We managed to break through the 50-day moving average yesterday at 75.10, and we're now nudging the rising 200-day line at 76.40. The initial target here, the top of that falling February trend channel, which has blighted us for most of the year, 77.35, and then the best case would be up to the top of that rising August trend channel, 78.50. On the downside, below 75.10, the floor of the channel around 74.30 beckons, but we're not expecting that given that the RSI is now in the upper 50s, and we should be home and dry for at least a day or two of further gains on this market. Moving along to the situation at the DAX, and here followed on from the bear trap gap reversal yesterday, so it was a great start to the week, and really looking for the 15,500 area to break. That was the resistance at the end of last month, and then head up towards 15,900 in the top of that falling trend channel from May. Intermediate target, I suppose, if you are fussy, 15,600. And the 50 and 200 day moving average area, but it's a bullish divergence and the bear trap gap reversal, so bona fide turnaround there for the DAX, suggesting that even though the rest of the year looks like a rolling top, we may actually rally in the last quarter. The Dow is also trying to rehabilitate itself higher. Let's support there for October versus May, so we managed to avoid the 32,600 retest. Current situation just managed to head up towards the area of the 200-day moving average at 33,800, looking for an end-of-day close back above that to give us the 50-day line there at 34,500 or so. Might have to upgrade or at least revise that uptrend line there from the early part of the year or late last year. So at the moment it looks like we're heading in a trajectory like that with the top of the channel there. Heading towards 36,000, but at this stage we can only dream of such a destination, even though there are some suggesting that with the current geopolitical issues, that would encourage the Fed to hold off on financial or fiscal tightening. The state of Bitcoin at the moment is still has been in a range between the 200-day line at 28,000 and the floor of that rising trend channel from January at 26,500. That's also the area of the 50-day moving average, the blue line there. We are just on that broken July resistance line, so hoping that this market will find support at or above that January line, and that the RSI will push back above neutral 50 versus 49 at the moment. But probably quite easy to stand aside and just wait for an end-of-day close through 28,000, which would then give us hopefully a rather quick move towards 30,000 plus later in the month or maybe next month. Moving on to the stocks, and a stealth riser over recent days has been Avacta. The shares hit our initial target there around £1.36, and about 136 we were looking for up to £1.65, which I think we may have, we just avoided it today, but that might be the next destination as we're so close. End of day close above that resistance line there from the end of February at 165 could give us a fresh leg to the upside. Best case scenario here, up to £2.10 by the end of next month, and the upside valid at least while we're above the old resistance from April at £1.47, and it's good to see the naysayers on this company get a decent slap in the face. Shares are up over 50% in the last month or so. So well done holders for ignoring the negativity. A less high-profile situation is Artisanal Spirits, and here we've broken through the 50-day line. We've also had gap close buy signal last month, and then an unfilled gap to the upside at the end of last month. So two decent signals so far. In fact, there's three signals given the way that we had low for September, but the RSI trace remained the same. So the view now is that while we're above the 50-day line, around 72 pence, we're heading for the top of that falling trend channel from the beginning of the year at 90 pence, and that could arrive by the end of next month. The 200-day line also rising now, so that is a positive in terms of momentum. Stock which I covered for the first time, I think, earlier in the week is now back again. Here we're looking for Beeks to break the 200-day line, £1.18. Obviously, we just backed off from that. Initial target here, 125. Best case target up to 140 by the end of next month. Ideally, we stay above 108, 109, which was resistance on the way down. In the meantime, rally started with an unfilled gap to the upside, bear trap gap reversal, and bullish divergence. So this is a grade A turnaround situation, at least on the technical front. Good contract news from Cambridge Cognition, and probably just in time given the recent share price action. Shares gapped down last month and they've had to gap up this month with the good news. Interesting that there's a very strong bullish divergence, a massive fall last month, but the RSI actually staying higher than it was at the beginning of the month. So that strong bullish divergence and the unfilled gap to the upside off the low should suggest that we head up towards the 90 to 95 area by the end of next month. Obviously that is a punchy call, but ideally we stay above the 68, 69 pence mid-price in the meantime. On to one of the stocks of the week to date. Not much competition actually, but Capital Metals managed to hit the initial target we had there, 2.25 pence by the end of next month, and then we had the best case scenario target up to 4 pence, which is a November resistance line target, which was hit during the session yesterday. At the moment we're looking for, I suppose, the stock to maybe just try and take out the highs of the year to date around 4.8 pence, but we may have to regroup down to the 3 pence area in the meantime. So probably at this stage above 3, looking for up to 5 pence, but consolidation clearly required after such a massive move for the stock. Onto a stock which I don't think anybody talks about, but it's got a cool name anyway, Devolver Digital. Here we've hit our initial target there, top of a rising trend channel at 28 pence. Above 28 pence on an end of day close, looking for the shares to hit 40 pence by the end of next month at the top of a rising trend channel from back in April. Not expecting the price action now to be below 25 pence. Gear for Music is a stock which I covered quite recently. I think last month, basically, we hit all the targets. The best case scenario target there at 160. We've had to regroup, but found support above the previous target there at 120. Above 120, looking for a retest of the 160 plus area. Obviously, the highs of the year to date, and ideally we stay above 140 even on that situation. Given quite a lot of coverage to Light Science Technologies, and looks like it's been worth it, even though the last month or so has been rather weaker for the stock. We have to shift along the rising trend channel there, but above the 200-day line at 2.5 pence, we're still looking for the shares to fill that gap up to 3.8 pence, maybe a bit like Capital Metals did, that kind of trade, and hoping for that by the end of next month. On to Mirriad, and here the shares edging higher. We've got this rising trend channel base. We've got a rising, sharply rising 50-day moving average, and above that at 1.7 pence, looking for up to 3 pence by the end of next month, which is obviously quite a punchy call, but with that rising 50-day line, it looks as though that could be a possibility. Lots of volatility in the Physiomics daily chart, with the 2 attempts to clear 3 pence. So far they haven't succeeded, but nice bounce off a rising 50-day line at 1.5 pence. Above that, we're looking for a third attempt at clearing 3 pence by the end of next month. On to Red Rock Resources, which has not covered itself in glory over the recent past. In fact, I'm not quite sure what the last time it did cover itself in glory. If we have to look back, probably that was back in 2020, or maybe a little bit in the summer of last year. Current situation is that we're looking for the stock to get back above that old June support there, around 0.13. Above that on an end-of-day close basis, there's a chance, maybe it's a small chance, of a move up to the 0.2 area, fundraising, etc. permitting. On to the last two. First one is Safestyle, which has been all over the place, mostly on the downside in the recent past. Interesting that we've got some bullish divergence, even though this looks like a one-way ticket in terms of the price action. Probably the best that one can say now is that we want to see an end-of-day close above recent resistance around 3.25 pence to then give the shares a chance of heading up towards 4 to 5 pence later in the month. EU Group is the last stock, and I suppose we're sort of kicking ourselves for not looking at stocks which have such nice breakouts, but we had an unfilled gap to the upside for the shares at the end of last month. We found support above old resistance around the £10 level and above £10, looking for £12.60 or even £13 at the top of that rising trend channel from back in May, hopefully by the end of this month. Just finishing off with a requested stock, which is Cellular Goods, and the shares seem to have responded well to news today. We've got a situation where there's been a falling wedge break and also bullish divergence, so lower lows going into September and October, but the RSI holding firm. Break of that resistance line there from May around the 0.47 level gives us the chance of not only the 50-day line, which we've already hit and then retreated from, but the 200-day moving average 0.72 maybe by the end of this month, while we hold above the 0.47 level. The best case scenario here would be a return to the 1 pence area by the end of next month, but obviously given the sell-off there today so far from that 50-day line, we might probably want to be more conservative in the upside at this stage. That's it for me today. More updates tomorrow.